SP Setia reported a net loss of 141.55 million ringgit for the second quarter as revenue plummeted by 75% to 331.3 million from the 1.34 billion ringgit posted the year before. In the second quarter of FY19, the group's net profit had been 114.1 million ringgit. The loss dragged down SP Setia's half-year numbers, resulting in a net loss of 113.1 million for the first half of FY20. Top line more than halved to 1.03 billion from 2.2 billion previously. According to the property developer, the loss was largely due to a one-off impairment of 145.9 million on completed inventories. However, the group managed to secure sales of 875 million during the same period. According to President and CEO Datuk Khaw Chap Jen, in addition to those sales, as at July 2020, the group had also secured bookings of 1.42 billion ringgit. Khaw says the emphasis has also been placed on clearing of inventories and rationalisation of launches. Going forward, Khaw says SP Setia expects to ride on the momentum of the increase in real estate activities spurred by Penjana initiatives. Singapore-listed property company Aspen Group Holdings has announced a team-up with CMY Capital, an investment vehicle of prominent businessman Tan Sri Chua to diversify into the manufacture and distribution of rubber gloves. Aspen's Malaysian unit, Aspen Vision All, CMY and Iskandar Basha Abdul Kadir will develop the new business to be undertaken by Aspen Glove, according to a statement. Ava will hold 70% in the JV company, while CMY will hold 25%, and Iskandar will own a 5% stake. Iskandar, according to Aspen, is an accomplished veteran in the business and government sector. CMY and Ava will contribute to the capital requirements of the new venture, which will make an initial investment of 104 million into Phase 1A, which will be fully operational by the third quarter of 2021. The plan is to have Aspen Glove eventually produce a total of 14 billion pieces of gloves annually. According to Aspen, the proposed diversification will allow the group to expand its revenue base and reduce the group's reliance on the highly competitive property market. MISC saw its second quarter net profit drop by 25% to 299.5 million, due mainly to the recognition of an impairment loss of 300 million ringgit. Revenue, in contrast, improved marginally from 2.17 billion to 2.19 billion for the quarter. It declared a second tax-exempt dividend of 7 cents per share. For the first half, MISC posted a net loss of 857.3 million versus a net profit of 910.3 million a year ago, as top line rose by 5.9% to 4.7 billion ringgit. According to MISC, the first half loss was mainly due to provisions and impairment losses recorded in the first quarter related to an adverse arbitration ruling, as well as the current oil and gas downturn. President and CEO Yi Yang Qian says the group recorded a stable performance, largely contributed by the LNG and petroleum segment for the second quarter, notwithstanding the global harsh blows from the COVID-19 pandemic. While he admits the coming months will be challenging, he says the group must persevere and remain optimistic on the development of its many strategic initiatives. Duo Pharma Biotech saw mild improvement in earnings for the second quarter of FY20, with net profit increasing by 5.8% year-on-year to 14.73 million from 13.92 million previously. Revenue for the quarter dropped 1.5% to 143.3 million ringgit. The group declared an interim dividend of 0.5 cents per share. For the first half of FY20, net profit was fairly flat at 28.3 million, while revenue rose 2.1% to 302 from 295.9 million ringgit. Duo Pharma says the improved top line was due to higher demand from its consumer healthcare segment. Group MD Leonard Arif Abdul Shatta said in a statement that the solid results demonstrate the sustained demand for its products from both the private and public health sectors. Going forward, among the positive developments include the group's new highly potent active pharmaceutical ingredients plant and the extension in contract period of the offtake agreement program for human insulin formulations. Private sector's jobs decreased to 8.4 million in the second quarter from 8.6 million recorded in the first quarter, according to the Department of Statistics Malaysia Bernama reports. Chief Statistician Datuk Sri Dr. Muhammad Uzair Maidin says the rate of filled jobs fell 0.1 percentage points as against the previous quarter to 98%, translating the total filled jobs to 8.2 million, while job opportunities indicated by vacancies were 170,000. Breaking it down, 55.1% of the job vacancies were in manufacturing, particularly in the manufacture of computer and electronic products, among others. Muhammad Uzair adds that in spite of the softer labour demand, there were still 12,000 jobs created in the quarter, although this amounted to about a half of the average quarterly jobs created last year. He says that as businesses adjust to the new normal, this may result in a gradual shift in requirements when it comes to employee skill sets.